What's going on, ladies and gentlemen? Welcome back to the channel. I hope you guys are well. And what the did Facebook just do to the market? Facebook is currently down on earnings about 22%. I mean, is it crashing the market? Did Facebook just literally turn on the lights at 11 p.m. in this party of the recovery that we're looking at out of January the 24th low? So in this video, we're going to touch base on alternate accounts for the SPY, and we're going to take a look at the Facebook chart. And this counts are going to suggest that perhaps, yes, we are in a dead cat bounce scenario, or perhaps we are going to see several new highs, right, on both, or on the market in general. So before we dive into the analysis, guys, you already know what to do. Subscribe to the channel, give this video a thumbs up, and don't forget to hit that bell icon so you'll be notified when I upload the video. Now, in the Qs, right, we have our chart up for the Qs, and let's take a quick look. Okay, we've reviewed this a couple of times already. So out of our November the 22nd high, all right, we have our W, X, and Y. Now this is counted quite nicely, right, in 3 waves to complete this correction in the complex format. Now we have out of our our December 28th high, we have our first A wave, our B wave to the 618, then our C wave down, which was a pretty much extended. This whole rally was pretty weird, and this is why I'm a bit hesitant, right? I'm still 50-50 on whether this market wants to continue on higher or whether we continue on lower, right? Because the signs are still not there. Several stocks have been letting us know that yes, perhaps it's a green light, but today Facebook just told us time to rethink this strategy. So going back to this market, to this chart rather, all right, I'm gonna dive down to the 15-minute time frame. We're gonna review price action out of our January the 24th low. So we can clearly see that there is a ending diagonal here, right? And an ending diagonal is made up of overlapping waves. Okay, that's valid. So we have a 1, our 2, 3, 4, and 5, and then we have our A, B, and C. Now this wave 2 in the minor degree came exactly at around the 786, I believe. Let's take a quick retracement from the low to the high, and yes, it was just shy of the, not shy, but just at the 786, right? Which is a pretty deep correction. Not a fan of a deeper correction because that gives us very little room for a wave 4 pullback to give enough wiggle room rather, or cushion, to stay above the wave 1. Now this is the key, right? This is the key to stay on this chart, to state that this is perhaps our primary wave count. Okay, as you can clearly see, the Qs are currently down. All right, they're currently down due to Facebook. The broader market is down, okay, except for the Dow. But the Qs took a big dump, so did the SPY, right after Facebook reported its earnings, which is currently down towards the $254 region, okay, from a 323 close today. So that's pretty bloody. All right, so we have not a lot of wiggle room left, and this is getting me a little bit worrisome. We have from 362 down towards let's see here, down towards 356.71, which gives us about a 1.5% of wiggle room left in the SPY. Now tomorrow could be a bloody day. Tomorrow hopefully there is some recovery overnight, there's no continuation to the downside, and we remain north of this level. Okay, one could argue, and I don't like doing this at all, ladies and gentlemen. I hate doing this. I hate going to the line chart because obviously the line chart gives us a closing basis. One can argue that perhaps this was the end of wave 1, okay, at 354.59. But excuse me, I'm not a fan of doing so. So we're gonna leave it at the top of the candle, at the top of the wick, because that's where I normally practice my technical analysis. Okay, so I'm not going to be biased, or I'm not going to be a bit in favor of my preferred outlook. All right, that's not what technical analysis is for. Or ultimately, the markets will do what the markets what the hell want to do, what in the world they want to do, rather. All right, so 161 is our upside objective, because out of our wave 2 low, right, if we take a quick count here, we have our wave 1, our wave 2, our 3, our 4, okay, 1, 2, 3, 4, and 5. Now we got to see 3 waves pull back to hold north of this. Actually, I take that back. I just kind of screwed myself here. This may have already been our wave 3 top, okay? So we got a truncated fifth. Okay, let's recount this. So 1, 2, 3, 4, and 5, then A, B, C. Now we have a pretty directional A wave, right, which is a gap down. Now that's a little bit of an alarming. We don't like seeing gaps on the A wave. all right, because that is indicative of perhaps a trend change, all right. But if we see a bounce tomorrow and then we see consolidation, perhaps that is the case. Otherwise, you know, let's take a quick look, right? Otherwise, maybe this was the third completed A, B, and C. You know, that could always be the case. All right, that could always be the case here, ladies and gentlemen, which is not bad, not invalidated either. 1, 2, 3, 4, and 5, which meets all the necessary requirements with fib retracements. And now this is A, B, and C, and then we go. Or maybe we hover around, go a little bit lower, but just as long as we remain north of wave 1, 356.70, we are still good to go. All right, let's take a quick look at our alternate count in the Qs, right? Which suggests that perhaps this is a dead cat bounce and Facebook just ruined the party for everybody. All right, so turning off this, and let's reset the chart, and let's focus on the 30-minute time frame. It's a little bit more less noisy. Okay, so this count here is suggesting that maybe, just maybe, okay, instead of this ending here, well, this could still be valid, right? Ending here on this November the 22nd, the third wave completed, right? We have our first A wave completion here, A wave, B wave, and then 3 waves down to the C to the W. Okay, this is still very much so valid from a Elliott wave technical standpoint. All right, we have 1, 2, 3, 4, and then the let me take that back. So this wouldn't be an ABC. This would be a complex within the complex correction. So it would be a smaller WXY. Okay, the same subdivisions that we were looking at in the previous wave counts. Now, however, you can clearly see here that this retracement from the high to the low on the 3-wave pullback, because this is still unfolding in 3 waves, right? We don't see evidence of 5 waves yet. We have 1, 2, and 3. Okay, came in exactly at the 50% retracement. 369.90 was our overhead resistance for the XY. Now, if this is the case, ladies and gentlemen, if we continue to push lower in our invalidation level, right? If we break this low, we bounce whatever, then it is likely that perhaps we are heading on lower. And what are those levels to watch to the downside? Let's take a quick look. Levels to watch to the downside will obviously be at the break of 334.35, 326, 302. Yes, you heard it, ladies and gentlemen, 302. That which means that this wave 4 is still correcting, and technically speaking, we are still within the bounds of a pullback, right? I mean, this is not what the hell is this? I hate when trading view does this shit. All right. At that point, I mean, if we go this low, ladies and gentlemen, I mean, this invalidates this wave count, right? Because we'll be overlapping with this wave 1. Actually, no, my bad. Yeah, that's not the case. There you go. So we still have room to go down towards 297, right? Which would be wave count invalidation. All right, so we still have room to go. It'll be cutting it short, but I don't know. I'm still 50-50. I'm still against the fence whether or not this is the actual wave count or the other until we start seeing key levels being broken. Okay, so over to the SPY. Let's take a quick look at our wave count in the SPY. And let's go to the 1 hour time frame. Let's review the bullish count on the SPY first, and then we go back to the bearish count. So the bullish count on the SPY is similar to what we're looking at in the Qs. So out of our November the 22nd high, we got ABCW, ABCX, ABC down in Y, 1, 2. We're looking for the third, and now we're going to look for the fourth, and then the fifth for the 1, the 2, the 3, and the 4, and the 5, and then we have our final 5th wave completion. Now, again, similar scenario here, guys, in that we want to see price action maintained north of 443.29. So this is key. 443.29 on the SPY is key so that we don't pull back south of that level. Okay. All right. So the bearish count, however, on the SPY is the same thing as in the Q, suggesting that this was the top WX, which just came in at exactly, I think it was the 618, right? Yeah, 618. Price Fibonacci price action right there. and then we're gonna head lower towards anywhere between the 411, 392, or 402. These three zones are our support areas for a wave 4 pullback of wave Y of wave 4. This will be a pretty bloody mess, right? I mean, we see a three waves rather, right? An A, B, and C. But the good thing here is that once we complete this A wave, right, we get the retracement to the B wave, and then we could take a short to the C wave of wave Y of wave 4. All right, so regardless of the situation, I still remain on the sidelines. I still remain pretty much neutral till the markets tell us otherwise, because this is pretty just nutty, right? We have three waves here. It's not letting us know. We want to see this wave pullback, hold support, and then we want to see a break, right? Potentially to take out these highs, and then we get our wave 2 pullback, and then off we go. So that is the game plan. Still neutral. Be patient, guys. I mean, Facebook really ruined the party for everybody, dragging a lot of these social media names down, including Snapchat. It's also down 20%. Bloody mess out there, guys. All right, so stay safe. Oh, actually, yeah, let's take a quick look at Facebook. So I've been working on this chart. I don't have it quite ready yet, but let's take a quick look here. So this is the daily time frame. So out of our IPO, right, on around May of 2012, right, we have our first wave 1 completed on February 2018. We have our A, B, and C. Now I'm having a hard time looking at this, which I'm gonna dive down to this chart quite thoroughly, because the wave 2 was just shy of the 23.6. So what if this was A, B, and C, right, which we found support at the 23.6 at 120. Then this is 1, 2, 3, 4, and then 5. I mean, implications still remain the same. This chart is looking bullish, right? But as you can see here, 252 is giving us a break below, right? So our next levels to keep watch for any support opportunities here is going to come at 196. It's going to come probably at this high, which was resistance here on July 2018, and then back here in July 2020 before we got the COVID drop. Okay, so we are literally erasing about 2 years worth of price action with this 23% drop in Facebook. So what I'm looking here, guys, is if in fact this is the wave 2, okay, not a wave 4 but a wave 2. This is 1, 2, 1, 2. Okay, so I'm just going to do this here. So this is a 1, 2, another 1, 2. All right, somewhere here 252, and then 1, 2, 3, 4, and 5, continuation higher. Okay, guys, regardless of the fact, like I said, I'm working on this chart. This is still looking a little bit bullish, but obviously the short term is indicating that perhaps we are heading a little bit lower on across the board. All right, guys, so yeah, bloody mess, bloody mess, I say the least. Let's take a quick look. Can't wait to see what the RSI opens up tomorrow at. Anyway, all right, guys, so I look forward to seeing every single one of you on Trending Waves, our Discord group. The link to the room is pinned down in the comment section. So thank you so much. Subscribe to the channel, give this video a thumbs up, and I'll see you guys tomorrow. Take care.